Welcome back, everyone. This week we're going to be talking about Braskem, ticker symbol BAK. It's not the best, but it's also not the worst. Unless you're measuring in terms of year to date petrochemical stock drawdowns, in that case, it is the worst. Braskem is at the intersection of the chemicals industry in Brazil. Neither is doing well year to date. Here are some chemical companies and their drawdowns in percentage terms from their peak. This is a 3-year chart I'm getting ready to show you. And if we look down, you'll see that I'll just refer to them. Well, you have Sasol, which is down 80%, and then Braskem is not far behind them, down 75%, and then on it goes. And then you have Eastman Chemical at down 9.66%. So pretty much insofar as this basket of petrochemical stocks to one extent or another, and they all partake in their own sub-niches and segments, but things are down between 10% and 80%. It also doesn't help that the real, however you want to pronounce it, Brazil's currency has fallen almost 18% compared to the dollar in the last year. The real is now sitting at its COVID low, shown in this chart. With a weakening, I'm going to call it a real. With a weakening real and a good deal of debt, this could be a concern, but not a concern for a few years. Below, you'll see that they don't have an intimidating debt wall maturity with no real concerns until 2028, as you can see. Layer on buyout hopes, which have only disappointed, and a bankrupt company, Novonor, the largest shareholders, needing to sell their shares, you can start to see why the stock is down so much. For those who don't know, there's been this excitement and hype over the last year about someone or a group of someone's buying out Braskem, and it hasn't happened. And that's getting a lot of people disappointed. And as a consequence, you can see why the stock is down so much. Oh, and communism. At least that's what I've heard a lot of people accuse Lula, Brazil's president, of being. Interestingly enough, on a historical basis, the stock bottoms out when the margins bottom out. Well, guess what? It appears that the margins have started inflecting positively on a trailing 12-month basis for the last 6 to 12 months. Meanwhile, meaning that they've bottomed out. You'll see gross margins, EBITDA margins, and net income margins. The three lines, blue, purple, and orange. And then the top of this image is the stock price. And you see that the bottom of the stock price chart, the spike downs is normally when the margins spike down. And I believe it's only so I don't know. I mean, if the past is prologue, then one might think that perhaps the stock has bottomed out, except if we were looking at it from a gross margin or EBITDA margin perspective, you would have thought that at around, let's call it roughly $8, and yet it hasn't. So it went from $8 and now it's at $5, and that's a 40%, 40% drawdown. So you would have been right the other times, but this time not. And there seems to be perhaps an externality to that, which we'll get to, which is the whole salt mine disaster and how that's kind of hurt them in the short term. Just by looking at the above chart, it would appear to me that the chemicals industry goes through a 4 to 6 year cycle. I say this because the margins bottom out roughly every 4 to 6 years. It appears to me that perhaps the stock will bottom out when the cash flows bottom out. It tracks less accurately the margins inflecting, but nonetheless offers another perspective. Another divergence from history is that BAK, as I'm calling them, historically bottoms out when the S&P Global Manufacturing Output / ISM Manufacturing Output bottoms out. And you'll notice in 2023 is when that bottomed out. Just like the margins bottomed out in 2023, at least the gross profit and EBITDA margin. So the global S&P Global Manufacturing Output bottomed out in 2023, and yet BAK stock hasn't responded. Let's look at their spreads, petrochemical spreads, and bring your attention more specifically to this right side of the image. You'll see the 9-month in the blue horizontal column. You'll see 9M24, so 9 months 2024, and then 9 months 2023. And then the green column, the green vertical column, I highlighted. That's the change. So if you look at the spreads are inflecting positively. At the very, very, very bottom of this chart, you see spread 1-2 and then 21%. And then PP, US, and Europe average spread 1%. And then, oh, there's another spread somewhere. But my point is spreads are going up. And then you'll say, well, input costs are going down to some extent and or staying flat. So spreads are improving, input costs are staying flat. So those are good things. And then, oh, here's a good one if you can see my mouse moving around. Here for spreads, you have PVC spread, and then if you go to the green column, it's down 34% from 9 months 2023 to 9 months 2024. But then you'll note that on a sequential basis, Q2 2024 to Q3 2024, that it's up sequentially, up 13%. So although not everything is up on a 9-month basis year over year, what isn't up on a 9-month basis year over year is in almost all cases up on a sequential quarter over quarter basis. There are noticeable improvements when you compare. I just said all that. So they've been having problems with getting feedstock from Pemex from their, you'll have to pardon my pronunciation because I'm not good at pronouncing words I read to begin with, and that's in English, let alone Latin words and Spanish words. So bear with me on that. They've been having problems with getting feedstock from Pemex for their Idesa plant in Mexico. As such, BAK is building their own import terminal, which is expected to be completed by the end of 2024, which is what this image is noting on their investor presentation. And then this image as well. I'd like to highlight that they'll be reducing logistic costs by 30%, and the capacity will go up to 80,000 barrels a day, 2.3 times higher than their fast track way of doing stuff. And that means they can do more. So they can do more at less of a cost, which is how you get increasing margins and increasing cash flow. It's probably for the best since Pemex isn't reliable now, yet alone into the future. Here's a chart of this bad boy of expected field declines. Some of the decline that Pemex is already experiencing is in part due to them deferring sustaining capex in order to fund social programs. Yes, that's correct. Many never learn the lessons from childhood fables, such as the golden goose. Maybe they don't have that in Mexico. I don't know. It's not a good long-term strategy, especially when a large percent of the federal budget is a beneficiary of Pemex. Nonetheless, I think that sourcing their own feedstock will help with cash flows come 2025 due to lower logistical costs and higher utilization rates. Another issue at hand is the Alagoas event. We'll just call it the event. Essentially, their salt extraction operation in Brazil collapsed, which subsequently led to a bunch of environmental and social issues. Here's a chart depicting the timeline. It happened, interestingly enough, it happened in January of 2020, when something else happened on a global level, and I'm kind of curious how their stock would have reacted towards the broader market, let's just call it the S&P 500, had that not happened. Like how much would it have gone down, these kind of disaster situations? Like a tailings dam collapses and the stock falls 50%. Well, this happens. How much would it have fallen without other pressure from the broader market and people panicking and being hysterical? Things like this can be an overhang for a stock. People or organizations who might want to buy the shares from Novo Nordisk would be concerned with such matters. Thus, they might want to wait until things were further resolved. But much of that is behind them. Total amount and balance. I hate these waterfall charts. I don't know why. They're not intuitive for me. I just do not like them. I wish people. There has to be better ways to show things. I don't know, but I do not care for these waterfall charts at all. Total amount and balance of provisions. They said a bunch of provisions and they've paid out much of it. So that is to say that cash spent has already been spent. Now, of course, they had to raise debt to spend that cash for disbursements and other obligations they've paid, which is the bulk of it. And so it's kind of behind them in that sense. It's not like the full amount has to still get paid. So the cash has already been affected on the balance sheet. The debt's already been raised. Like these are things behind them and already, well, to some extent at least, priced into the stock. The only question now is, were their provisions enough? With headlines like this below, link an article, only time will tell. Braskem hinders relocation of families affected by tragedy in Brazil, making residents get sick. With all of these internal issues, the Idesa and Alagoas, going on during an overarching decline in the petrochemical industry, it should be of no surprise that a new CEO has taken the helm. This too is a wild card. New CEOs often get a free pass in their upcoming quarterly report for shaking things up and being able to blame it on the old CEO, and they'll call it righting the ship. This can often lead to radical one-time charges and write-offs and such on the income statement. Is that what might drive this stock down to $3? Perhaps. The CPI, Commission of Inquiry, has been looking into Braskem too. In recent news, Brazil federal police indict 20 in connection with salt mine catastrophe in country's northeast. I'm sure if I dug around a whole bunch on a bunch of websites I don't even know what they are yet, I could maybe find out who got indicted or this or that. And a quick search didn't find a name, but maybe I'm just not good at searching. Nonetheless, just another piece of news. Not just, but another piece of news. In even more recent news, Brazil has recently announced their fiscal package. The market didn't seem to like it. I guess they're not being conservative enough, like America is. Now, of course, you can say that's not fair because Brazil's interest rate is over twice as high as interest rates in America, so therefore you don't have to borrow as much or be in as much of a deficit as America as a percentage of GDP for it to cost the same. And fair enough. I left that out because I guess I forgot. Much of this is headline news. All I know is that ICI Idesa is going to be reducing their costs of feedstock. The Alagoas drama is more behind them than not. Their margins are improving and the forecast for petrochemical prices in 2025 is stable. When do you buy this chart? If you're so inclined to engage in commodity investing. Do you buy this chart in the green zone, the horizontal bar, or do you buy this in the red bar? Now, this is kind of a counterintuitive setup question. Well, most would say in the green, but their predilections for narrative over arithmetic reveals that they actually would prefer to buy in the red. Well, that's not my style. Because it's about feelings. They don't like the feelings down here in the green. So they wait for the red to happen, and then they like those feelings. And then their feelings tell them what to do. If you choose the green zone, what do you think the news will be like? Rhetorical question to prompt reflective thought. I've purposely ended this article with all these negative headlines for a reason. The reason being is that you'll need to contend with the sentiment of it on an ongoing basis. Many do not have the resolve for that. Have you already forgotten about the sequentially improving spreads and the rebounding margins with an industry forecast for 2025 that's flattish or cautiously optimistic? Right? Were you so overwhelmed by recency bias and that headline news that comes out on a daily or weekly basis, as well as all the chatter going on, whatever social media, and then you completely forget about the once a quarter report that actually fundamentally reflects what's going on in the business? Because it's pretty easy to get caught up in all that. And if you're that type of person, then Braskem might not be for you. If the reasons I presented to you today aren't enough to be bullish for the future, then I offer you this. They also seemingly condone adults stealing balls from kids and laughing about it, and then calling it human rights and social responsibility. And they then give your child a ball to play with, which then balances out the initial ball theft. So they take what's earned to them, that's their right, and they also distribute fairly. And that has to be worth something on the ESG spectrum. Yes, those were jokes. With that said, I'm ending it here. Thank you for watching.